Right, you're going to talk about the Magic Order Blocks MW indicator for TradingView. I have that up here, but let's take that off right now. Magic Order Blocks, and add it back in. So the way we'll do it is we'll search the TradingView indicators, or use a TradingView indicator search window, type in Magic, and then you'll look for Magic Order Blocks MW by MWright Inc. Select that, and here we have let's see, the order block. Now the way I have it set up, or the way I built it, is that you can change the sensitivity. Or actually, before I get into that, let's talk about what an order block is. An order block is a candle that precedes a large move in price. So here you see this red candle. It has wicks that go from here to here, so the high and the low, and that preceded a very large move. And we're looking at the SPY, SPY. So that preceded a very large move. And the significance of that is that when the price returns to that level, there is a good chance that there may be some reaction that is similar to what happened before. So when price gets down to this mid price of this initiating candle, there's a chance that price will, or there's a higher probability or higher likelihood that there will be a response at this point. So that's the significance of an order block. So let's change the sensitivity around. Oh, this is what would be a bullish order block, because this order block preceded a very large bullish move. A bearish order block is a move that precedes a very large bearish move. So let's change our sensitivity. And the way it works is that this indicator looks at consecutive candles that are green, and or the size of the entire price movement in ATRs, in the average true range of a candle. So here I have it set up where it has to have moved with 4 consecutive green bars, which is the case here, and it has to have moved 5 ATRs, or 5 times the average true range of the candles leading up to here. And so let's change that sensitivity so it's not, there we go. So now it's not 5 as a requirement, it's only 4. And we see we have a new bearish order block right above. I'll change that to 3, and the number of consecutive bars to 3 also, and that should change the sensitivity a little bit. Change that to 2. There we go. So now we have something where everything that we see on the screen will be a minimum movement of 3 consecutive bars and have a movement of at least 2 ATRs. Now I can increase the ATRs, reduce the ATRs, increase the number of candles, consecutive candles. And what you'll see is that this indicator right here, the way I have it configured, is that it is showing, let's see, it is showing the candles. So how many candles, 1, 2, 3, 4, 5, how many candles followed this order block formation, and how many candles followed this order block formation. Now if I wanted to use ATRs instead, I can click this right here, use ATRs instead of consecutive candles and label indicator, and it shows that this was only two ATRs, a 2 ATR movement from here to here, whereas this was a 1, 2, 3, 4, 5, 6 ATR movement, which shows that this was a much more significant, or this will in the future be a much more significant area of support than this would be as an area of resistance. And you can change that because the data changes from time to time, and sometimes if you don't have it sensitive enough, you may not get anything. For example, when I move this up to 3 ATRs, the next bullish the next bearish order block was way up here, which isn't as useful because then you'd have to wait for that price action. But when price does hit that, you would get a good reaction, or you would expect to get a good reaction. Also, this label right here, we can add the timestamp. So for order blocks like this one where it started really far back, I'm going to click show timestamp of recent order block. That way we can see that this was initiated on 11/11 at 9:35, and this was initiated 11/12 at 1:20 p.m. or 13:20. We can also show small order block labels. So all the order blocks that got formed are now indicated here. The magenta signaling a bearish order block, and the blue signaling a bullish order block. And we can use large labels to show details. I won't go into all of that, but you can see details about each of the order block. It tells you, how much volume, how many bars, etc., etc. So let's turn those off. And then you can also show all of the bullish and all of the bearish order blocks up to the last 5 or up to the last 6, or however many you want to show, so you can get an idea of where the next one might pop up. And this can be a great thing about this is that you can use this feature and the TradingView chart where it says scale price chart only, where it'll only scale the information in the price chart, and it won't scale the new bars that got formed. So now if you want to see the bars, you have to move over here, and the way I did that is that I scrolled up or down on this axis, and that frees you up to be able to move this around wherever you want to. And then let's go back to auto fit state of the screen, and then we can go back and uncheck scale price chart only, and then we can see all the order blocks again. So I'm going to go back to scale price chart only. I'm going to remove the order blocks, so I don't want to show all of them. And here we can see, let's go back to and change the sensitivity. We want this to be 2 ATRs. Okay. And so again, what you're looking for is for the price to hit one of these order blocks, and at that point you can choose to enter a trade, or you would expect, if you expect the price to bounce from a bullish order block, you can enter into a long trade, or if you expect it to bounce off of the bearish order block, you can enter into a short trade. So let's do a quick replay so we can see what happened during the day. So I'll hit replay. Let's go here, and it'll show the order blocks and how they change over time. So I'll hit replay, move the replay speed up 3 times. So you'll see new order blocks forming. So a new order block just formed here. but you do see the bounce that took place right there. So it bounced off the order block, but then it broke through it. So now we've just formed a new order block. Now we formed another new one. And that takes us about through the end of the day. And let's just pick another random time. Let's see. Let's get something where there's a lot of ups and downs. Here's a nice example. So let's do a replay from here. So we're going to select this and start our replay. So here we have price moving. Let's slow it down a little bit. So now we have two order blocks. There's a bounce from that one, a bounce from this one, bounce from this one. Finally broke through, hit the next order block, and went all the way through. Super bearish. And it hit an order block dating back to October. Created a new one. Okay, so right here we're waiting for, okay, a new order block formed. And what we're seeing are the most recent bearish and the most recent bullish order blocks. That price is in between. So here we formed a new order block. And so we can expect that if it comes down here, there might be a bounce, or if it comes back here, there might be a bounce. All right, we're after market. So let's speed that up a little. And then let's see, once market opens, let's see what happens. There we go. All right, market has opened. We hit this order block. Bounce down from there. But you get the picture. The main thing is that you use the order blocks to find periods where the price will change definitively. It's not 100%, but it gives you a better idea of what's going on. If you've ever been in a place where you've tried to enter into a trade and you saw the price moving and just didn't know what the heck was going on and what was causing the price to move, there's a lot, and a lot of times it could be, it might be volume weighted average price, the VWAP. It might be a lot of things, but the order block is formed because somebody actually went in and made a huge trade at a very specific price and caused the price to move. So there was a very clear cause and effect, and that's why the order blocks are so significant and can be so useful. Also on here I have the QQQ and SPY price levels indicator, which tends to coincide with a lot of order blocks. It basically separates the pricing on SPY into $2.50 increments. And at those increments, and I've never heard anybody talk about this before, but it's something I've noticed repeatedly, that at these increments you also tend to get some reaction, which is what you see here. Green candle, and then you have a nice fat red candle with a large, or with a big low. And if you're scalping, that's a big move. That's it. If you have any questions, please leave it in the comments. You can reach me on TradingView at Emrite Inc. Like, share, and subscribe, and hopefully you'll get some use out of this indicator. Goodbye.